Good afternoon and welcome. Please type a Y in the box if you can hear me and if you can see the screen. Welcome to the webinar Navigating the Stock Markets with Elliott and Fibonacci. I want to thank everybody for coming here. We have people from different groups. Thank you so much for coming. And before I start, I know that you were asked to do a little survey, so I want to just highlight some of the results, and then we'll get started right away. So some of the results: 71% of you trade options, 50% trade stocks. So most people are stock and options traders. 44% trade futures and 24% trade forex. In light of the fact that we invited stock and options traders to this webinar, we are going to focus all of our examples on those markets, as you will see. Now, in terms of levels of experience, 24% are novice, so that might mean just starting out or just beginning. 62% consider themselves intermediate, and then 15% are advanced. So now we have a little breakdown of who is in the room. And of course, not everybody filled out the form, but this is a good basis on which to gauge. My name is Jody Samuels, and we have Juan Maldonado with you today also. I've been trading the markets for a very long time, starting in the 1980s, and there really hasn't been a time when I didn't use Elliott Wave or Fibonacci in the mix. Juan Maldonado is a very gifted Elliottian, and he is our Elliott Wave strategist for our programs. So what do you say we get started? Please read the disclaimer to yourselves. Thank you. And before I begin formally, let me just tell you a little bit about our program. Just one slide. We are a premier global online trading school, the home of Forex Foundation, the Elliott Wave Series, and Elliott Wave Ultimate, also known as the Wavy Tunnel Pro. And we offer tools, services, and education to trade Forex, CFDs, and stocks online. So our goal is to give you, the trader, the tools to navigate the global markets with confidence. And that's what we do every day. Just a little plug for my book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. If you'd like to take a look at this, please go to the Amazon or the Wiley websites, and I think you can even download the first chapter or read the first chapter. But I'm told that it is a very solid book, and please check it out. Thank you. So The Trader's Pendulum by Jody Samuels. We're just going to do a little bit of theory, and then I'm going to get right to some live markets, and then I'm going to turn it over to Juan, who is actually going to do wave counts on some of the hot stocks and indexes that are discussed on a regular basis in our Monday afternoon stock room. So first, we're going to just talk about the 3 pillars of trading: success, analysis, strategy, and coaching and accountability. When we talk about analysis, we're talking about having a thorough knowledge of the market to be able to determine possible future scenarios and be prepared to take advantages of opportunities that arise. So we use Elliott Wave, Fibonacci, and harmonics in order to have market context. When we have market context, we can limit the trades that we take, and we can maximize the likelihood of successful outcomes. So what I am going to show you today is one of the market cycles that is really easy to spot that you can begin spotting when you leave the webinar. You can look for them. I'll show you how to look for them. And I think you're going to be very pleased with today's brief analysis. The second pillar to reaching the path of success, because that's what you want to do. You want to be consistent, you want to be successful, and you can define success however you want success. Everybody is on a different path. And don't just say, I want to be profitable, because there are different levels of profitability too. So I do urge you to really think about what success means to you. I'm just wearing my coaching hat, I guess, when I threw that one out. But the second pillar is to have an effective strategy, which is easy to understand when making a trading decision. So after you analyze, and the analysis can be as basic as determining whether we're in a trend or not. And in terms of stocks and options, determining if the market has retraced enough for us to take an option position. I'm not going to talk about necessarily vol levels, but if you want to go long the market and you want to sell a put and buy a call as a possibility, you want your timing to be right. Okay, you want your timing to be right because you have time decay when you're looking at options. There are a bunch of factors that go into taking options positions, as you well know. And I'm not here to discuss time decay or volatilities or the underlying or the delta or anything else that goes into specific options trades. I'm here to show you a way to get your timing right so that you can take better options positions. So strategy is used to identify the exact entry point, stop loss level, and profit target, and know when to trade and when to stay out of the market. Sometimes a win is just staying out of the market. So I'm going to really try to stress to you today to look for a particular patterns that you can learn and internalize, so that when you see these patterns time after time after time again, you'll be able to recognize them and take immediate action. And of course, removing the emotions is key, and that's why we have a strategy and we define our strategy and implement it in terms of a trade plan. That's what this is really, a trade plan, entry and exit points. Coaching and accountability is also really important. It's important for somebody to evaluate your trades and give you feedback. Akin to that is being with a like-minded community that you can share your options or stock ideas with. And by doing so, you don't feel alone, and you feel like, gee, if you're all reading the markets in the same way and somebody else whom you respect a whole lot is saying the same thing, that can be a reinforcement for you to take a confirmation for you to take the position. If that's how you operate and you look for confirmation, it's not a bad idea as long as you're doing your own analysis yourself. So when I used to work at the bank on Wall Street, I used to love coming up with my own analysis and then speaking to some of the really, really good proprietary traders on the desk and asking what they thought about the market that I was contemplating buying or selling. And if they came up with the same trade, the same position, then I was really, really excited about that. And I was new at trading at the time. Obviously, that was, when I worked at the bank, I was starting out, but I was with the bank for 14 years. And I still think it's a great idea. So grab yourselves a trading buddy, join a community. You can join our community. We're constantly sharing back and forth the trade ideas. So let's just talk a little bit about Ralph Nelson Elliott and how he came up with Elliott wave analysis. He studied various market indices over a 75-year period in the 1930s when he was actually bedridden, and he discovered that stock markets traded in repetitive cycles, and that these cycles or waves reflected the emotions of investors. And he named these waves. He labeled these waves. And then let's just talk about Leonardo Fibonacci. He was an Italian mathematician born in the 12th century, and he discovered the Fibonacci sequence of numbers, so it is said. And the Fibonacci sequence is right here in blue, where you add the first two numbers, 0, 1, plus 1 to get 1, and then the next two to get 2, and then 3, etc. These are important. This sequence is very important because we use the sequence to get the ratios that I'm sure you are all too familiar with. Our retracement ratios, 38.2%, 50%, 61.8%. Our extension ratios to measure trend moves, 100%, 161.8%. 423.6%, and there are some in between as well. So all of these ratios stem from dividing one number in the sequence by another number in the sequence. And Elliott wave analysis is really, like all the analysis, is really based on the Fibonacci sequence. Harmonics is a little bit different. It uses different Fibonacci ratios in the harmonic patterns. I'm going to show you a little bit of both. In this picture on the left, this is called the complete market cycle, taken from the Elliott wave principle by Frost and Proctor. And on the left, we see a 5-wave move up, followed by a 3-wave move down. So right now, one important lesson for you to take away is that corrections move in 3s and that impulses or trends move in 5s. So I'm here to tell you that even if we're in a trend move and we're going to do 5 waves, the first 3 waves are pretty easy to spot, whether you're in the trend or whether you're in the correction. But the trade that I'm going to highlight today is the wave 4 trade, because I absolutely love the wave 4 trade. I don't know if you can see my cursor, probably not. But the wave 4 trade, where you see wave 3, wave 4, is a prelude to wave 5. So we're going to look at a bunch of stocks to show you the pattern that we see using our strategy called the wavy tunnel. And I'm going to give you an opportunity to actually look at the wavy tunnel in detail. And when Juan does his analysis, I'm also going to give you an opportunity to get a special discount on our wave counts. But there are some people in this room who want to take a really good educational program, and there are others that want wave counts. So I'm going to show both of you what you can do in case you want to go further with the work that we do. So this is the complete market cycle. I'll talk a little bit more about that over here. At point 0 and point T, we have the trend and the end of the trend moves. I'm going to show you the wave 4 trade. And most of you who have been trading stocks and options have been elated because we've had one-way moves pretty well since the election. So finally, many stocks have had a clear path in one direction. And the question is, that's great, but how do you get in? What do you do to get into a market that's trending up? And the first thing is to be able to scan the markets to see which markets are trending up. And we have a way to do that. I'm going to show you momentarily. And then the second move is, okay, once we get the trending markets, how do we take advantage of them? And that's where timing comes in, because when you're taking options positions, if you're buying options, you want the timing to be right because the time decay. And there are many other options positions that you might take, like option neutral, where you want a market to trade sideways. So I'm going to talk about that as well. Actually, I'll talk about it right now. If you if you are buying, if you want to buy the market and apply it through the options and options strategy, then you want your timing to be right for this wave 4. If we are in a wave 4, or you sense that we have completed a market cycle, which would be an end of the trend move, okay, and an end of the trend move is at the end of a 5-wave sequence, then that could be another option idea, option strategy. If you are one of those people who thinks, okay, we are going to have some sort of a correction now. So let's just move on for a second here. I just want to talk a little bit about harmonics. If we have this 3, 4, 5 pattern, what we can also do is find a harmonic pattern to help us determine what the end of the 5-wave sequence is going to be. And we also use divergence. We use the awesome oscillator. We look for divergence. So when we combine a harmonic pattern at the end of the move with divergence and a few other things as well, like some other confirmations, then we would be more apt to follow the market correction down, which would bring us to this point here. And it's this point here that is the pattern that I'm going to show you now looking at live markets. Okay, let me just see if, yeah, live markets. First, I'm going to show you our scanner. Okay, and our scanner is something that you get automatically with our Wavy Tunnel Pro course. This is our Elliott Wave desk where we have our membership. And in the scanner, we have a stocks heat map. So we have over 100 different US stocks. So what I've done was I've sorted by all blue. That means all bullish. This is really a heat map. And the heat map goes from the 1 week down to the 5 minute. So these are all of the stocks that have been trending up on every single time frame. Now, I want to scan for all blue from the all red from the 1 hour to the 5 minute. I'm going to scan all red from the 1 hour to the 5 minute. And the reason why I'm doing that is because if the markets are bullish in the bigger time frames and the markets are bearish in the smaller time frames, I want to know, because I want to get ready to buy these markets once these smaller time frames start to turn blue again. And I don't want to act until I see them turning blue. So this is the first step to making an alert or coming up with a watch list that I could just go through once a day even and just follow for the turning point. Now, I'm going to show you some examples, of course, and the examples that I picked out were the ones from this watch list, the ones that are blue on the bigger time frames and red on the smaller time frames, and we're going to talk through them. Let's get to the markets. All right, so this first stock that was on the list was Alcoa. And I want you to picture the wave 4. So we have a nice trend move higher, and this is the daily chart. And then we have a wave 4 move, which is a correction of the trend. This is what I'm going to be showing you for all of these stocks. So the idea is that once these stocks start to move up and start to take out these highs or start to go above the wave, this is our Wavy Tunnel system, by the way, then we would be very interested in perhaps going long, or in terms of options trades, you really want to see the market retrenching quite a bit before you express yourself in the options market for a bullish move. So this is the first example. The second example is Apple, but I'm not going to discuss Apple because Juan is actually going to do the wave count on Apple. He's picked a few stocks. I'm just showing you this picture and just try to get the picture in mind of an uptrend and then a correction. And Juan is going to discuss the correction that we've had of late. I'm not going to get into the specifics, but you can see the trend move up for this stock. And it doesn't even have to be Apple. It can be anything, right? I just want to talk about the pattern that you're seeing. And then we have a nice correction. And that's when you want to look to be getting in again. You don't want to get in after the market is stretched, right? After the market is stretched. You want to be patient. And this is where the timing comes in. All right, here's another one. This is, I had to put up the weekly and I had to scrunch it together because we have been in some healthy sideways correction for a pretty long time here. Okay, the market has gone sideways. And this is very interesting because one of the Elliott wave corrective patterns is a triangle. So a triangle can be in a wave 4 as well. So I see this as a nice triangle, and at some point it could trade higher if we take out all these high levels. It can also trade down. We're not sure at this point which way it's going to go, which is why this would be, if this is on our watch list, we would want to see if we break out of this triangular structure and then act accordingly. But this pattern looks like a nice wave 4 pattern, which would project up once it breaks. The next stock is Intel Corp. And let me see if I can, this is also the weekly. I put up the weekly here also. And you can begin to see that not all bullish stocks are created equal. So this is a little bit messy, right? We had a nice move up and we had a correction down. This was a beautiful wave 4 area. Oh, you can't see my mouse, I think. Let me see if I'm not sure if you can see my mouse. Can you see my mouse if I hover it here? Just let me know in the chat box if you can see my mouse. I'm moving it on the screen. You can. Okay, good. So this in here was a beautiful 3-wave move down. It comes right down into this whole supporting area, and this would be one of the trades that you would be looking for a buy. And then we moved up in a choppy fashion. Now I would look for another retrenchment down and keep this on the watch list, but certainly look for another move down before buying it. Okay. And when we looked at the scanner, all of these the shorter time frames are red, meaning bearish. And if this continues to go down, the shorter time frames will stay red. And if it does come down and then start to turn around, then those smaller time frames will turn blue anyway. So that's Intel. Let's see this one. All right. This is the daily chart. Again, this whole consolidation is something that we would look for this leg higher. And now we're in another retracement type of activity where we would look for potentially lower levels unless the shorter time frames turn around and start to trend higher. And then we would be interested in perhaps buying for the next move up. But it's messy. We're in a consolidation here. Okay. Netflix another one where we've broken down and now we wait. Like, we do not want to buy Netflix here, because right now we've started a wave 4 correction, or we started some kind of an ABC correction. And this is, I don't think it's going to end right now. I think it's going to either trade sideways, or it's going to complete maybe a zigzag ABC pattern, which could take us down to this level. We don't know yet, but I would definitely hold off on this for now. Let's just see what else we have here. This is Sprint. Also another beautiful pattern where price has been moving up in a trend, and then we had a nice correction. And then this is where you would definitely look to go long in this area. We did move up a little bit, we came down, so it looks like we are still consolidating, but this could be a nice area on which to think about expressing yourself for another move up, and certainly look at the smaller time frames for confirmation there. Here's another one. Okay, Symantec Corp. So this is a beautiful consolidation right into our buy zone. It might need a little bit more time here, and once that turns around, that might be a nice trade to take. And if we look back, we had this consolidation here where price turns sideways. Corrections can be sideways or they can be steep. So when we look back here, the correction was sideways and then had a nice move up. This correction is steep. So it could be that we're not done yet with this correction. We're in correction mode. What I'm showing you now is all the stocks that are in correction mode. And how do I know that? Because I scanned for bearish on the shorter time frames, but the longer time frames are still in uptrends. We're just in a correction. Let me just show you a few more. Okay, here's one, United Technologies, also in the midst of a correction. Wait and see. Okay, this is what we like to see. And let's look at the next example, Yandex. Also, we're in a nice corrective mode. And what we would look for is perhaps we just follow the candles. These are daily candles. So if we are going to trade lower, we just follow the candles. At this point, if we trade a little bit lower, or if we turn around here, and if you're just following daily candles and we start to move up and trade above this area, this wave, might be a time to express an options position. If we trade lower, it might be a time to express an options position. And obviously, I'm just showing you long. We're not even discussing short. There are stocks that are at a different part of their market cycle, and we're just discussing this wave 4, so this part of the market cycle. But the wavy tunnel discusses like all different parts of the market cycle. So down here as well, for example, when it's been in a downtrend and the market is finally starting to move higher, we have that kind of trade handled as well. Let's just do a few more. All right, here are some examples. I think I'm done with the ones where on the scanner anyway, where I scanned for the hourly down to the 5-minute bearish. This is from the scanned all bullish, so all blue from the weekly down to the 5-minute. And when you see all blue, this is the daily chart. It's kind of hard to get in because everything is just moving straight up. So back here, we had a nice opportunity to enter, right? Once we had the nice pullback. But up here, we have to stay away right now from buying. And we want to wait for its cycle to turn around. I don't know what would cause it, but that's what we would look for in before buying this one. We would look for a move down into this area and look at the correction. It could be, again, a steep correction, or it can be a sideways correction. But I wouldn't want to buy this one long at this juncture. And here's another one. No, this is, I don't know if this was on the all bullish. I guess it might have been. But this is another one where the market did correct down, and this was a nice time to buy, okay, right over here. Once we started to turn around and move up, this is the point at which the smaller time frames would have turned bullish, but you don't even have to use the scanner to see that. You would look for a close above these highs or above this level to express yourself in a position, and this would be your confirmed buy. Okay, and now we have to wait and see if the market is going to take out these highs or if it's going to come back down again. That's the part that we don't know. Here's another one, another example of all blues on the scanner, Boeing, and same kind of thing. Why would we buy it now? We wouldn't buy it now, okay? Because we're moving up now. We want to buy it on a dip, and I'm not talking about selling. Here's Citibank, same thing. The market had been moving up, but look at this. We had a nice sideways corrective pattern, giving a few different opportunities to buy this market, and now we've broken out of this triangle and we've traded higher. If we trade higher from this level, we don't know. We could very well do, or we can come down and retest this consolidation and wait for another consolidation before buying it. Tesla, would you be buying it here? I don't think so. Okay, because we've gone straight up. We've gone straight up. And Berkshire Hathaway, this was another example of the trade, the wave 4 trade, when price came down and retraced and then started to move up, a nice buy trade. So where does Fibonacci fit into all of this? Very easily, because we would measure the previous swing move, and we would also get a handle on what percentage retracement these wave 4 moves are. So if you know Fibonacci, you would be able to use your Fibonacci tool to confirm. And where does the harmonics fit in? Well, the harmonics would fit in this piece right here. X, A, B, C, D. And when we would move up to a price target, So what I'm going to do now is I am just going to, I think that's the last example that I have. I do want to turn it over to Juan, but I first want to just show you something. And I'm just going to post a link in the box in case you do want to check out our program. And I'm going to do that and post it on a little sticky tab on the chat. And this is our flagship Elliott Wave program, where we teach you the wavy tunnel. It's an Elliott Wave trading system for all markets. It includes the scanner. It also includes wave counts for 2 months. And Juan is going to show you the wave counts. And it's like having a wave count, an Elliottician by your side. our Elliott Wave desk service. So wavytunnelpro.com is the website. You don't have to all go to it right now. Just write it down and you can go to it later. And I'm going to turn it over to Juan now, who is going to show you wave counts on some of his favorite stocks and an index or two. And while Juan is setting up, I'm just going to answer a few of your questions. Is it a programmable platform? Yes, it is. I mean, everything that I showed you today, you can put up on all of the platforms that you're using, and I will take questions at the end. So over to you, Juan.
Thank you, Jody. That was fantastic. Hello, traders, and welcome. Thank you very much for being here with us today. I'm going to cover the Nasdaq, and then we will check some stocks from an Elliott Wave perspective. So this is the daily chart on the Nasdaq. The Nasdaq has been climbing after each retrace. Also has been moving faster than the S&P, than the Dow Jones. For example, from last Friday that they started the corrective wave, and we're going to check this on lower time frames with more details in a second, it moved stronger than the others. So let's see now the lower time frames, like the 4-hour chart, to explain better what to expect during this week and what will be the next move on the Nasdaq. And based on this information, we will check some individual stocks. So here is our 4-hour chart wave count, and mainly what we are saying is that the price did a leg up from the bottom to this high. We're talking from the low that happened on May the 18th till the high that we have last week on June the 9th. So that's the wave one. All this sequence is just the wave one for an extension to the upside, and it started the wave two. I'm talking about the wave one black that I have here on top, and the active wave is the wave two black. As Jody was explaining, the corrective waves are going to have always a three-wave sequence or a combination. In this case, it's just a simple zigzag, A, B, and then the C down. So we know that it's pending another leg down to complete the sequence before climbing and before doing the continuation, where the minimum target for the Nasdaq will be at the 5909, 5901. The previous high, of course, that will be the minimum target. And at the breakout, once the price is able to break out that strong resistance, we can start looking for the FIBO extensions on projection, because the most common is the 161.8, and that's really far from the current price, because that will be the 61.63 area for the wave 3. Now, we should focus on this wave 2 in order to estimate, in order to calculate where is likely to be over. So one of the first things that we are seeing here is that the first leg down ended at the 61.8%. 61.8% or golden ratio. So I'm using the bodies of the candles of the first swing down. I think that is pretty clear that this is a swing. It's just one piece of the sequence. And precisely there, the 61.8 is where we're seeing the bodies, 56, 80, 81 area. Then the B wave started, and because we use harmonics in combination with Elliott wave, the next level, and this is a precise target, because when we combine the harmonics with the Elliott wave theory, we create this fantastic combination where we can know precisely the target that we are looking for. And that, of course, is going to be more objective than using Elliott wave, using only Elliott wave. Okay, so the target for the leg down is the 56.23. That is just the 78.6% of the distance taken from the low on May the 17th to that high on June the 9th. So that will be the target, 56.23. Having the direction of the market and a precise target is going to help us to take better decisions. So once we have the price at that level, we're going to look for a reversal candle, like a hammer, or like a morning star, or bullish engulfing, also divergence, and the wavy tunnel will provide us then the precise level to buy and start following the move up. But with Elliott wave, what we can take from this analysis right now is that we are looking for another leg down. So keeping this analysis in mind, that Elliott wave says that we need another piece down before the climb, let's go to some stocks, because I would like to show the highest probability ones that we are seeing these days. Let's start with Apple. Apple is impressive how it has been climbing. This is a daily chart. And we have been seeing Apple creating new highs. And the last high went to the 156. After that, the same as the Nasdaq, a little bit different structure, but the same direction, it started a corrective wave. Corrective waves always are fantastic opportunities in a bullish market, of course, to plan the next trade, to plan the next buy. Let's take a quick look of the previous retrace. Look at what happened at the end. It continued, and we are in a new retrace. So at the end, guess what? We need to follow the move to the upside. This is going to be just a corrective wave. Okay, so the idea to capture the end of this wave 4, first of all, is to set some Fibonacci targets. Let's add the retrace. To calculate the retracement for a wave 4, we need to take the Fibo from the end of the wave 2 to the end of the wave 3, and you will learn all these details in our course. The most common target, better, for a wave 4 is the 38.2%. So that will be at the 136.56 area. That will be the most common target. It doesn't mean that the price necessarily needs to go there, but we can have that target as a reference, because it makes sense, right? If Nasdaq is saying that we need another leg down, so of course we know that Apple moves in the same direction, so it's likely to go and visit the 38.2%. At that level, once we are at the 136 area, we can start planning our bullish trade with a target at the 156. Let's go to the 4-hour chart and check how the internal structure is looking. Currently, we are in the wave 5 of the wave C. So let me highlight a little bit better for you this structure. What we are saying is that there is a wave A, this is a B wave, and we are in the C wave down. That is active. We only have inside in the internal structure, we only have a 3-wave sequence, and a C wave always contains 5 waves. So here we have only a 3-wave sequence. This is the wave 4, and looking at the wave 5. But now mixing a little bit everything and putting everything together, we can start looking for that 137, 136 area for this leg down. The idea is to find the convergence among these stocks and the Nasdaq to see which one is going to show the reversal faster and and read the market properly, and use, of course, the wavy tunnel to validate the end of the wave 4, because that's the biggest challenge when you are using Elliott wave, finding the end of the wave that is the same as finding a new trade. The next instrument I would like to cover is NVDA, that is showing a similar structure, a little bit more powerful. This move has been extremely powerful. We have been doing the same as Apple, watching every retrace and getting ready for the continuations. So this is a daily chart. The last consolidation, when everybody was wondering if the price would reverse because it was really expensive, the stock at the 119th. But we define this as a wave 3, wave 4 combination. Then the wavy tunnel shows us the confirmation for the move up, and it was a beautiful and great move to the upside to the 168. 168. The same as the index, as the Nasdaq, and the same as Apple, the price started to build the corrective wave. But here is the challenge, because actually we know there is a corrective wave, and we know that after the corrective wave in a bullish market is going to continue. But the most important question is when and where we should start looking for the trade. In order to solve that question, at least the first one, let's go onto the 4-hour chart and measure using the Fibonacci tool from the end of the wave 2 to the end of the wave 3, where the 38.2% is. That is the most common target for the wave 4. And that comes to the 140.51. 140.51 is going to be our target for this wave 4 that I have here, the wave 4 orange. And it's just ending the B wave right now. Let me highlight better what I'm explaining. So they move down from the top of 3 to here the first wave A. Then we have the B wave, the second piece. So this will be A. This will be B. Pretty similar to Apple and Nasdaq. And looking for another leg down. So once we have the new leg down that is pending, because a corrective wave always is going to contain 3 waves inside. So that's the reason why we need to wait for the leg down before planning the bullish trade. So once we have the C wave for the wave 4, at that level, we are going to use the strategy to buy. And in the meanwhile, we can take some day trades. We can find some validations also inside to capture this leg down. But now we have the direction, and trading with a plan, trading with the map, with the roadmap, is going to be always so much easier, because then you apply your strategy and you validate or invalidate these analysis. Very good. And the other stock that we're going to check today, that is another one of the ones that we are closely watching and finding the following trade, is TGT, Target Corp. Let's go to a higher time frame for a second, like a weekly chart, because here we have something really important. And is that we believe is not the end of this company, is just a big corrective. So mainly what we are planning, and the main wave count says, is that here this last high on the weekly chart, this is the weekly chart, was a wave 3, and we are in a deep wave 4. The deep wave 4 has been taking the shape of a zigzag, where there we have the A, the B, and looking for the C down. As you can see inside the C wave, we only have 3 waves: wave 1, wave 2, wave 3, wave 4. So once the wave 4 is over, and we believe it's really close, and I'm going to explain that setup on lower time frames, the plan is to follow the move down. So let's go to the daily chart. Okay, so here we are on the daily chart. We're finding the end of the wave 4. From the classical technical analysis, we can describe this corrective wave as a flag formation, as a bearish flag that would be something like this, the channel of the flag. And indeed, don't forget, always the corrective waves are going to have 3 waves. Here is the first one, here is the second one, and here is the third wave. So we are looking for a 5-wave sequence inside the last leg, 1, 2, 3, 4, 5. So like a new high. Here is the previous top. It's going to be like, we can't call it a double top because we are not at the top of the market, but it's like the same idea. The double test of our resistance area, and with the validation, just with a nice candlestick reversal pattern, we can start following the move down. The minimum target, or the most conservative target for this trade, would be the previous low, 52.60, and then if the price continues, because we're expecting that it's going to continue a little bit lower to the 50 area, maybe 49 area, we can keep we can follow that move a little bit deeper. But don't forget that this will be the last leg, the wave 5. Then the market will be divergent. Then we are going to start looking for a reversal to continue to the upside. So as you can see, trading with Elliott wave is easier because we have the direction of the market and because we can understand and we can have a plan in terms of direction. And then we plan the strategy using the wavy tunnel that is fantastic, the combination and the harmonics to find the best levels. Okay, so that's my analysis for today. Thank you very much. Now Jody is going to continue with the session.
Thanks, Juan. So you all heard Juan, and if you want Juan to be your personal Elliott Wave analyst and strategist, count. So let me tell you about that. I told you about the Wavy Tunnel Pro course. The sticky note is posted there, wavytunnelpro.com. But let me tell you about the daily Elliott Wave counts, the Elliott Wave desk. We have an Elliott Wave desk with daily services. So if you would like to just check us out and try us out and have Juan be your personal Elliott Wave analyst and strategist every day for a month, and get a small little, a nice 4-module course for the price of a meal, you're going to be interested in this. This is the link, elliottwavedesk.com/expo. Okay, let me tell you what you get. The service includes daily 4-hour and 1-hour charts on 13 different markets. So the markets include, the markets that you'd be interested in would be the 5 stock indices, the S&P, the Dow, the NASDAQ, the Russell, and the DAX. We also have 6 currency pairs, all the dollar pairs, and then gold and oil. There is a daily video that is produced in the morning for you to get started and to have your roadmap for the day. This is the Elliott Wave Desk service. But when you take the course, the Wavy Tunnel Pro course, you get 2 months of this service as part of it. You get the scanner and you get a whole lot more. We have the Monday stock room, and we have a Thursday Elliott Wave Ultimate room where you can just, it's like where you can just come in and ask your questions and ask for the analysis that you want to see. And Juan takes requests for all of the stock rooms, so you can certainly get requests if you want a full analysis done on a stock that you're considering trading. Plus, we have morning trading rooms as well, not in stocks, mainly in forex, really in CFDs, forex. There are some platforms that have stocks on them, but you have to be living outside of the US. So the trading platforms outside of the US do have everything on them. So this is the Elliott Wave desk, and this is what you would get. Back to Basics seminar with 1 month of our premier market analysis for $17. So that's it. It's $17 for the 4-module seminar. And then you would get 1 month of the Elliott Wave desk. If you want to try us out, this is a great starter package, especially there were some newbies, some novices in here. The 4 modules, I've been told, well, they're pretty good because basically we packed everything in that I could think of from all of my years of trading. So becoming a trader, market structure, fundamentals and candlesticks, and introducing Elliott Wave analysis. So for $17, you will have access to a course and 1 month of the Elliott Wave desk. If you're ready, some of you have been following us for a while and you want to get started already with our flagship program, wavytunnelpro.com, please join us and you will also obviously get the Elliott Wave desk and the Elliott Wave desk Ultimate with the additional features. So at this point, I'd like to take some questions. If you have some questions, and then we'll call it a day once we've answered your questions. And we'd love for you to join us. It's just really, we have a great community of traders. We have a great community of stock, futures, and forex traders. And we would love for you to join us. If you have some more additional questions that aren't answered today, then please email me personally and I will email you back, Jody@FXtradersedge.com, JODY@FXtradersedge.com. So ElliottWaveDesk.com/expo, write that down, check it out, and WavyTunnelPro.com is our flagship program. I don't see any questions. So I want to thank you very, very much for attending. Thank you, Juan, for your great analysis. And may you have success in your trading businesses and see you again. Hopefully, we'll see you on the inside. Thank you so much, everybody, and have a great rest of your day. Oh, and now I see a few questions coming in. Is there a trial for the scanner? Email me, Hannah, and we'll see what we can do about that. Jody@FXtradersedge.com. Okay, thank you, everybody, and have a great day.